Ladies and gentlemen, good day and welcome to the ELDECO Housing Industries Limited Q2 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Bhatt from EY. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on the call. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risk that could cause future results, performance, or achievement to differ significantly from what is expressed and implied by such forward-looking statements. Please note, the result and presentation are available on the exchanges and on the company's website. Should you need any assistance to receive them, you can write to us, and we'll be happy to send them over. Today, we have on the call the top management of ELDECO Housing and Industries Limited with us to walk you through the results and answer all your questions, which is represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group CEO, and Mr. Sanjay Agarwal, Group Vice President, Accounts and Taxation. We'll begin with the highlights of the quarter, followed by Q&A. Now, I would like to hand over the call to Mr. Pankaj Bajaj. Over to you, sir.
Thank you, Abhishek. Good afternoon, everyone. I welcome all the participants to ELDECO Housing and Industries Limited Q2 FY23 earnings call. Let me begin with my brief comments on the real estate market, after which I will touch upon the operational and financial performance for the quarter. The residential real estate demand in Lucknow continues to remain strong, although there is now a concern about macroeconomic and global factors like rising rates of interest and inflation. We feel at some point this will start having an effect on the pocket of the consumer and consequently the demand. However, we continue to be in a supply-starved environment as far as quality real estate is concerned, especially in Lucknow. Moreover, since the beginning of the pandemic, there has been a noticeable trend where the consumers are prepared to spend more for branded players. So I think that if at all there is a slowdown in the hot real estate market, it may not affect us much. As one, the overall supply is constrained, and two, there is a consolidation in the market which benefits us. For the next few quarters, I believe that supply rather than demand will be a primary hurdle to growth. To address this issue, we have turned our attention to business development. As a result, 3 land parcels have reached the term sheet stage in Lucknow during the quarter. 2 are primary land aggregations in Lucknow, and 1 is a prime group housing parcel. Primary land aggregation is a time-consuming but high-profit margin model, as we have seen in the past. We hope to be able to bring these projects to the market next year. Should these projects go beyond the term sheet stage, we plan to partner with high-quality debt and or equity funds at the project level. We shall share more details once we go beyond the term sheet stage. Operationally, during the quarter, we successfully handed over 1.13 lakh square feet with registration of 84 homes. The collections continued to remain strong during the quarter and stood at rupees 48.3 crores. We are also planning to launch 2 projects in Imperial Phase 2 and 1 group housing project in ELDECO City by the end of the current financial year. Currently, we are awaiting the approvals for both the projects. Additionally, we are proposing to increase our beneficial share in the Bareilly project to around 50% from the current 40%. I am happy to report that all our current projects are progressing well in terms of execution, sales, and collection, and we are confident of completing all of them within or before the RERA timelines. I would now like to move on to our recent financial performance. The revenue from operations for the quarter stood at rupees 32.9 crores compared to rupees 40.1 crores in Q2 FY22. The revenue from operations for H1 FY23 stood at 60.5 crores compared to 55.2 crores in H1 FY22. The EBITDA was rupees 9.6 crores for Q2 FY23 and rupees 20.9 crores for H1 FY23. The EBITDA margin stood at 29.1% for Q2 FY23 and 34.5% for H1 FY23. The rise in construction costs and inflation kept the margin under some pressure during the quarter. The company's profit after tax stood at rupees 8.9 crores for Q2 FY23 and 19 crores for the half year FY23 respectively. So with this, I would like to open the floor for questions. Thanks.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhimanyu Kasliwal from Choice India Limited. Please go ahead.
Good afternoon, sir. Am I audible?
Yes.
Okay. Firstly, lovely to talk to you. My question actually was regarding our target market, which is Lucknow and now Bareilly. Now, yeah, I'm sure you sympathize when I say that this is a property landscape which is not very familiar to most analysts. So I had requested the management when I met we had a few weeks ago, request again, could the company share an independent study about the Lucknow and Bareilly and UP real estate market so that we can have a better understanding of the superb growth prospects. So that would be one. It's more of a question of a request. The second question is that do we have a plan to enter other cities in UP besides Lucknow and now Bareilly? Again, the independent study would help us understand the UP real estate market better. And last question, sir, is that the projects that we have launched or we are launching in the next 2 quarters and we are awaiting approvals, have the cash flows for them, those 2 projects started, or no cash flows have even been received because you are waiting approvals? But once we get the approvals, we can start expecting good amount of cash flows. And if so, could you give a rough idea as to what kind of cash flows can we expect?
Okay.
So there were 3 questions. If you want, I could repeat. Otherwise,
no, I've noted them down. No problem.
Okay. Thank you, sir.
So I'll answer them in reverse order.
Okay.
So the new projects, Imperial Phase 2 and a group housing project in ELDECO City, which we have 2 in ELDECO City. We applied for approvals for both. So whichever one we get approvals for first, we will launch that. So we don't know which one we are going to launch there first. So these 2 projects, legally the cash flows cannot start till you get all the approvals. Once you get all the approvals, procedurally you have to get a RERA registration. Only then can you get advances from customers and you can launch the project. So I think that answers it. It's a general question. Cash flows do not start till you get all approvals and you have a RERA registration. So it's a sequential process. We have to go through it. We are awaiting approvals. Then we go for RERA registration. It's a race against time. We want to launch it within this financial year. The site is ready. The plans are ready. So we are just waiting. So the cash.
What kind of cash flows are we expecting, sir? 100 crores, 50 crores? What are we targeting from this?
We should be getting 450 crores of top line from these 2 projects for the next 3 years.
Okay. So second question, our plan to enter new cities?
So the two things are about. I'll answer the first question first about the independent study. These are proprietary studies which are there from IPCs. Some of them are made, so we have access to some of these. But unfortunately, IPR now do not allow us to share them freely because these studies have not been commissioned by us. Some of them are free for in the public domain. We'll see if we can forward some of those. But the second point is related to the first one. These studies and our own entrenched knowledge of the market tells us that Lucknow is a huge market. And there was a study by, I think, Top Equity or one of these people recently, which ranked it amongst the top two, one of the top tier 2 markets of the country. So we don't even have a 20% market share in that market as of now.
Mm-hmm.
I think that with the consolidation happening in the market, traditionally real estate developers have had low single-digit margin in their respective market. But with this consolidation trend, I think this trend is going to, the leaders are going to have double-digit margins. So we have a clear runway which we don't want to get diverted by right now, and we want to grow big in Lucknow. But that's why we are tied up with new land parcels. Having said that, if we find that, and I've said this in many calls, if we find that we are not doing justice by just being present in Lucknow and our growth is getting hampered by just being in Lucknow, then we'll definitely expand to other cities in UP as well, which is what we did with Bareilly, because land acquisition in Lucknow is difficult, so we did Bareilly as an interim thing. It was not a strategic stepping out of Lucknow, because Lucknow we feel we have not done justice to. So a lot depends on the next 2-3 quarters. There are these 2 new projects and 3 land parcels that I have mentioned in my opening remarks.
Understood, sir.
So if all these projects come online, I don't think we'll have the bandwidth to step out of Lucknow at the moment. But if some projects don't come out, then definitely we consider.
Okay. So, quick request. ANAROC had issued a study, and that was very helpful for Keystone. So if something on those lines could be done for Lucknow and Bareilly, that would really be helpful for the investor community. So
okay,
that
we'll try to get something done, and we'll see if we can.
That will be fantastic, sir. Thank you so much. Looking forward. Goodbye.
Thank you. Our next question is from the line of Priyank Gupta from Guardian Advisors. Please go ahead.
Good afternoon, everyone. My question is regarding the bookings which we have received in the current quarter. If you can possibly throw some light, it appears that the realization has improved from the last quarter.
So I don't completely understand the question, but about bookings, the trend that I thought that our bookings are quite low in this quarter, and I don't know if you asked that. So we had fresh bookings of about 25 odd crore rupees or 28 crore rupees. That's because, Priyank, we did not launch. We could not launch any new project, and these are what we call internally sustenance bookings. These are leftover inventories of existing projects which keep getting booked at a sustenance kind of level. Typically, in a real estate project, the bulk bookings happen at the launch of the project. Because of the delay in approvals that I mentioned earlier, so we are still awaiting those approvals, and we hope that we should be able to get them and in time to be able to launch 2 projects this financial year. I think we'll see a substantial uptick in the quarterly booking numbers in the coming quarter. That's one. Second, I think you talked about realization. Definitely, realizations are going up on a weighted average per square foot basis. Traditionally, if you look at it there in our investor presentation, traditionally we have been in the mid 3,000, 3,500, 3,600, 3,700 rupees per square foot range. But of late, that number has inched up to 43 to 4,500 rupees per square foot, and that's generally the case. Part of it is to offset the increase in cost, but also it is also the consolidation game at play where ELDECO brand gets a premium over other people. So yes, realizations are going up.
Since the company is investing more into Bareilly project, if you can share with us as to how it is doing and what is the visibility forward.
So we had a total of 40 acres of land, out of which we had approvals of about 35 acres, and 5 we are going to apply soon. And the first 35 acres, we have done very well. We got advances from sales. Part of the inventory was locked up because it will only get released on obtainment of completion certificate as per the local development authority norms. The inventory which is free, it is 80 to 90% booked. The collections are strong, and we are using that money to complete the project. And hopefully, in 6 months' time, we should be applying for completion certificate, which will release more inventory for sale first. And secondly, we will also have another parcel of 5 acres. And the prices, just to give you an idea, when we entered this transaction, they were about 2,500 rupees per square foot. Today, they are 4,000 rupees per square foot. That is in a span of 18. So we hope that if you remember the deal, the minimum guarantee of 8% return on its investment. I hope and I am convinced that the return will be much more than 8%. How much it exactly will be, it's a little premature to say. But the money will start coming back in the next couple of years. So the total investment till now earlier was 27 crores. We are proposing to, because it's a great project and it's last mile kind of situation, we are increasing our beneficial share from 40% to 50%. And I think the money is going to come back with handsome return in the next couple of years.
And this is because the existing investors are getting diluted, or we are buying any of the other investors in this?
No, the existing investors are getting diluted. No, as in I mean they will get diluted, but it's a secondary sale. The money is not going into the project. The project doesn't need the money.
Oh. Yeah, that is what we thought.
Yeah, because the project doesn't need the money.
And finally, a quick clarification, if you can elaborate as to what is primary land aggregation, which you said in your talk at the beginning of the call. So can you explain that primary land aggregation, what it is?
So if you look at our track record, we are very good at large projects. And that too, horizontal development, large townships, typically 30 acres, 40 acres, sometimes 100 acres. ELDECO city is 140 acres. Now, such lands are not available off the shelf, and you have to aggregate the land with from disparate farmers. So typically, you have to deal with the traditional landholders, and you'll get them to sell them at a price, and that's a difficult job because you have to deal with 20, 30, sometimes hundreds of farmers to get them to sell to you at a reasonable uniform price, and for the land to be contiguous, and there should be no unacquired pockets in that land. Now that is a time-consuming process, as you can understand. But as soon as the land gets aggregated, there's a premium to it. So it's a high-profit, time-consuming thing, which we have done very well in the past. Typically, one does not like to do it because it's a time-consuming process. And if we were to get aggregated land, contiguous aggregated land, we would pay a premium for it and take it off the shelf. But as you know, we've been trying to do that for the last couple of years. It's not happening. So we have gotten into primary land aggregation. It's a skill that we possess now, but we are using it now for 2 parcels.
So in the Lucknow project which you were talking about, we can assume that we have almost 90% of the hurdles, and it's about to be complete, the aggregation.
No. We are a little early there, so that's why we don't have. We are not sharing further details. It's just that we started advancing money to farmers, but it's a time-consuming process. We don't have 90% of land, and it's a little premature.
Okay. Appreciate. Thank you so much. Thank you very much. Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. The next question is from the line of Monica Arora from Share Giants. Please go ahead.
Thank you for the opportunity. I wanted to ask a couple of questions. Like as you have added new land parcel, how much supply can be generated out of it, and what kind of projects basically you will plan on the land?
So the ones which are close to launch, which is Imperial Phase 2 and the group housing parcel that's have you gone through? I presume that you have gone through the presentation. So in the investor presentation,
yes.
There's a slide
Yes,
called
yes.
forthcoming projects. I think it's slide number 17.
Yeah.
And that these are land parcels which are with the company, which are under company's control, and we are just awaiting approvals here or they're under planning. So you can see that the sellable area there is the total 14 lakh square feet, 1.4 million square feet. And without going into the details of individual projects, the average realization for the company is in the range of 4,500 rupees a square foot. So that's about 700 crores of inventory in these projects. That's the project which we already have. Now there are, in my opening remarks, I mentioned 3 more projects where we have not disclosed them yet because they're in the land aggregation stage or in the term sheet stage. That should add another 500-600 crore rupees, but it's a little early to say how much land we actually end up with. We don't even know how much land it is, because it's an aggregation thing. So right now, firm, we have about 700 crores of inventory, which is under planning, under approval, etc. Another 600 crores, which is in the pipeline, but a little premature.
Okay. And one more thing on the new launches. Could you throw some light on these, like when they are likely to complete and what is the approximate supply that you are anticipating to generate from these in terms of area?
So in PIDA, it's in the sellable area, 4.5 lakh square feet. It is there in the presentation. And we will be launching either serial number 4 or serial number 5, GS03 or GS04, and the areas are respectively mentioned there. And you can multiply that by just a rule of thumb, 4,500 rupees a square foot. The number could be plus minus 10-15%. And Imperial should take about 2.5 to 3 years to complete phase 2 once we get the approvals, which should be any time now. The group housing project, I think, would take about 4 years.
Oh, okay. And we've seen that realization has been growing sequentially now. So, do you think that this will continue in future going forward?
I actually think so. Nobody can predict the future, but in my opening remarks, I mentioned a couple of trends. One is there is a supply constraint.
Okay.
So that is a positive for realizations going up.
Okay.
And the supply constraint not in ELDECO. In the market, there is a supply constraint. We find that there's more demand and less supply of projects. Second, there is a general inflation in the market. Costs are going up, and it's going to get passed on to the market, and the market is going to take it because of the supply constraint. And third is there is a consolidation happening for which the bigger and branded players are getting a premium. For all these 3 reasons, I think realization will continue to go up for some time.
Great. Thanks for this opportunity. Thanks.
Yes.
Thank you. Our next question is from the line of Abhishek Agarwal from Prithvi Finmart Private Limited. Please go ahead.
Hello. Yeah, hi, sir. My question is related to our EBITDA margin. Despite growth in the revenue quarter on quarter, we are seeing that EBITDA margin has dropped. So can you give more clarity on this? What are the reasons in this?
Yes, I can give you clarity. So the EBITDA margin this quarter has dropped there's a one-time GST input credit reversal which has happened. We had to do it sometime. If you remember, when the GST introduction happened, there used to be input credit for all industries, but later on, input credit was stopped for real estate development.
Correct.
So we had to have unutilized GST input credit, which we had to reverse. So there's an impact of about 5-6 crores, which is an impact of about 8 to 10% in our EBITDA margin. But that's a one-time thing. The other thing which has happened this quarter specifically, is that the product mix in terms of revenue realization has changed a little bit from horizontal plotted development to group housing projects. 2 our projects, Dreams and Laksa, have got recognized, and the profit recognition is mainly coming from them. We find that group housing projects are typically low margin as compared to plotted large township projects, for reasons I explained earlier, that those are aggregation gains and they are long term, but the profit margins are high. So for these 2 reasons, the EBITDA margin in this quarter are low. But it's not something which is it's not for good. it's not there forever, because one is a one-time charge, and going forward we do have some good plotted horizontal township kind of projects coming, which have good EBITDA margin. So I do expect this to revert somewhat in the coming quarters.
Okay, so we can see the same EBITDA margin what we have done in the last quarter is Q1 of FY23.
Yes, similar margins.
Okay. And one more, what the revenue guidance you can give for this year and next year? Because we already have few projects which inventory yet to be sold, and some new project is also in the pipeline. So if you can give some guidance on that.
So the revenue recognition in our business is now, there are new accounting norms where we do not follow POCM method, the percentage of completion method. It is all on completion. So given that the rest of the year, the second half of the year will be more or less the same as the first half of the year in terms of, because I don't think we have too many projects which are getting completed. But of course, the EBITDA margin could be higher. Next year onwards, we do feel, because one of our main projects, Imperia Phase 1, should get completion certificate next year. So that would be a higher number. What it will be, I can't say right now.
Okay. And sir, how we are seeing urbanization shaping out in Lucknow market and Bareilly market, where we are going to launch a few projects. So can you throw some light, because government is also focused on improving infrastructure in UP geography, and they are also planning to bring more industry and IT sectors in this market. So how you are seeing this urbanization in this market? Because that is the only factor which can improve our realization in a significant manner.
So Abhishek, that's a great point. I'm so glad that you asked this question. We find that it's all about urbanization in these towns is almost a giant uncontrollable force right now. I mean, sitting in big cities, we don't realize what is the pace of urbanization which is happening in tier 2 cities. And even the infrastructure upgrade, especially in UP in general and Lucknow in particular, is massive. And you go to any corner of Lucknow, you find that, it's visible to the naked eye. You find traffic jams, you find more density, you find a rapid pace of urbanization and sophistication of the urban life in these cities. And the opportunity is immense. I think Abhimanyu in the first question asked me for an independent study. Unfortunately, we don't have one, but I think time has come for one to have a study like that, and so that we can share that with you. So that it's also related with the other question, that do we need to step out of Lucknow? We actually don't. With the kind of urbanization and the growth in market and our leadership position, I think just growing that will be, it's going to be tremendous in the next 4-5 years. I easily see us more than doubling or tripling in just this one market in the coming few years.
Okay, sir. Sir, as we are seeing that more businesses are coming in UP market, so my question is related to, as we are also planning to go for the commercial property apart from this residential thing, what we are doing currently?
So we did do some office buildings, as you can see in our past track record. So as of now, we are going slow for office buildings, and we are actively looking for residential projects. But you know that we are a multi-asset kind of company. We are comfortable with any asset class, and with the right opportunity, we will take it. So we don't have anything in the pipeline right now. But with this kind of urbanization and sophistication in market which is happening, there's no reason, if there's an opportunity, we will not take it. We are comfortable with that asset class, whether it is retail, whether it is office, or any other alternative kind of asset classes. We are comfortable. We'll look for it if something comes our way. Like I said, I think in an unrelated question, a lot had been made about our debt-free status. So I had always maintained that it's not a conscious strategy to be debt-free. It's just that the project has to justify taking debt. So now we have these land parcels where we might take debt. We actually will maybe. So just like that, it's not a conscious strategy just to be residential. So nothing is cast in stone. Depending on the project, depending on the opportunity, we will go for other asset classes.
But sir, do you have land bank near to cities kind of where we can set up office, that a limited point what I have.
No, as of now, no, we don't have an office for that.
Okay. Okay, done. This is from my end. Best of luck for the future.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. The next question is from the line of Harish Shah from HS Investments. Please go ahead.
Thanks for the opportunity. I'm sorry, I've joined the call a bit late, so pardon me if my calls are if my questions are a bit repetitive in nature. This was just in continuation with the earlier participant what he has spoken. So with respect to the Lucknow market, do you see this defense sector development adding more growth to the Lucknow market?
Yeah, I already answered this question, and there was a recent study that Lucknow is one of the top tier 2 markets, especially in North India. So this is, if you look at South and West India, when we were in our childhood, we were told there are 4 metros in the country, but some of those cities, Bangalore, Pune, Ahmedabad, Hyderabad, they become almost as big as the big metros. The same thing under the radar, people in the financial world sometimes are not looking at it, is happening in North India also. There is a Jaipur, there is a Chandigarh, there is a Lucknow. These are growing very fast. Tremendous infrastructure upgrade is happening, and tremendous GDP growth is happening in these cities, especially Lucknow and its catchment areas. And the kind of infra upgrade which is happening, it is going to drive economic growth in a big way. UP itself has a target of being a 1 trillion economy. You may have read about it. And
Correct.
So if you look at right now, it's about 1/6 or something like that. Like that, even if we don't reach 1 trillion and we reach half of that, even then it's a massive runway of growth, and a lot of it is going to happen in Lucknow. And we are the brand leader there, and we are firmly entrenched, and we aim to capitalize on that. So we see a great runway of growth in Lucknow specifically.
Thank you. And with regards to, you have already mentioned in that currently you have not consciously chose to be a zero debt company, but that's how your financial seems to be. But given an opportunity, if you have a kind of opportunity to grow faster, so would you look forward to borrow and raise debt or grow?
100%. In fact, the 3 term sheets that I mentioned in the opening remarks, and I don't think you were there for my opening remarks, the total capex there will be in the region of just for land acquisition, would be about 200 crores. Now, we don't want to deploy just equity for that. We are going to be partnering with a judicious mix of external equity and debt at the project level, for which we already have very strong interest from private equity funds and debt funds, real estate-oriented debt funds. So there is going to be some debt, but that's going to be only after we proceed beyond the term sheet stage.
Okay, thanks. And I believe we are also rewarding the shareholders with a healthy dividend. So do you have a dividend policy for the same, and would you like to continue when you have a runway of growth?
As of now, our informal policy, earlier we did not have, but in the last few years, if you see, we have been about 15% of the total profit we've been paying out. So our payout ratio is about 15%. But as of now, there is huge growth opportunities. We would like to continue 15%, but if some of these projects don't come through, then we'll actually like to put it up to 25%. But informally, we are at 15% right now.
Okay. And just last question from my side. What would be the guidance that you are seeing, profit guidance that you are seeing for this coming FY23?
It will be kind of similar or little less than last year, I think.
Okay. The reason being?
Because of why I explained it to one of the other participants, that there is a one-time hit and because of some GST input credit reversal this year, And slightly the product mix has changed in favor of group housing projects, which have typically lower profit margins in this particular year, because most of the revenue and profit recognition is happening in lower profit margin projects this year. It's going to reverse itself going forward.
Okay.
Yeah.
Yeah. Thank you.
Thanks.
Thank you. Anyone who has a question may enter star and 1 on their touchtone telephone. Our next question is from the line of Rakesh Verma from Fine Assurance. Please go ahead.
Hi, sir. I just have one question. What's your view on joint development projects for the new projects? As you, I think, mentioned in some earlier participant questions that you are open for a faster growth. So I definitely believe that there are in the tier 2, tier 3 cities, there will be a lot of landowners who will be interested to join hands with developers like you. So what's your take on these joint development projects as well?
No, we are neutral. We are agnostic to it. We only look at the project IRR when we make an investment decision. So whether the IRR comes from a complete ownership model or the IRR comes from the JDA model, we are agnostic to it. So we are typically, when we go for a project, it has to achieve at least 22 to 24% pre-tax kind of IRR. So equity IRR for us. So that can be, we don't really differentiate between JDA and complete ownership.
Okay, sir. I'm just sorry I haven't went through your presentation. So can you let me know your exact land bank if you have currently?
I will, Abhishek, can we forward Rakesh a copy of the presentation? It has entire details in granularity. It has
Sure. I'll have a look at it. Not an issue.
Yeah.
Thank you. That's so much. Thank you.
Thank you. Anyone who has a question may enter star and 1. Participants, if you wish to ask a question, you may enter star and 1. Any participant who has a question may enter star and 1 on their touchtone telephone. As there are no further questions from the participants, I would now like to hand the floor back to Mr. Pankaj Bajaj for closing comments. Over to you, sir.
Thank you all for your presence today and your interest in the company. I hope you are able to make the rest of the current financial year count in terms of performance. So thank you. Have a good day. Enjoy the match. Hope India wins today.
Thank you very much, members of the management. On behalf of ELDECO Housing Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.